Hello everybody, this is Toni Turner and welcome to the market now on Friday, January 24th at about 3 p.m. Eastern. Well, Wall Street's main indexes are struggling for direction today as investors avoided big bets and assessed fresh data to gauge the health of the economy, while Boeing dipped after a warning of a bigger than expected quarterly loss. Also, an S&P Global survey showed that business activity slowed to a 9-month low in January amid rising price pressures, but firms reported higher hiring, supporting the Federal Reserve's cautious approach to monetary policy this year. The central bank is expected to meet next week, and traders see no change to borrowing costs. However, they now see the Fed delivering its first rate cut in June. Okay, so on that note, let's go on to 3 charts that could give us some insight into the week to come. First, as we always do, we're going to look at a daily chart of the S&P 500 Spider, symbol SPY. Of course, this is the exchange-traded fund that closely follows our benchmark S&P 500 index. Now today, when I captured this chart, the SPY was trading at $607.60. Just right at the recent all-time closing high. This little candle back here was the recent all-time closing high on December 6th at $607.81. So at the moment, the little December 6th candle of the all-time closing high is a few 21 cents higher than where we are right now. We'll have to see where it closes. Now, since it touched this high back here in December, the SPY went from nicely walking up, and you can see back here, and it did fall in July pretty hard, but then it started as it had been before, walking along this red line, the 20-day moving average, doing a really good job of making a nice uptrend, higher lows and higher highs, until it got to this all-time closing high back here, as I said, on December 6th, and that was at $607.81. All of a sudden then all of a sudden it was doing a nice job, but on the day they mentioned rate cuts and said there wouldn't be that many, the SPY fell pretty hard on December 18th down to $585.89, held for one day, then gapped down on that green day you see here, December 20th, to $580.91. We can call it 581 to make it easier, then rallied back up through the green line, the 50-day moving average, up to the 20-day, but note it could not go any higher, got up to $601.34, couldn't get over that red line, the 20-day, then fell back down through the 50-day, back down to this January low down here at 580, and held there, and I was hoping it would, because it kind of kept us here. We've got that, at least a bumpy line, but a price support line potentially. At any rate, rallied back up here to 600, then fell to the January 13th low down here to $575.35. Now, thankfully, after touching that low, it's been rallying for the last week and a half or so, to where we are now, again at $607.60. Now, of course, we're looking at this high back up to the all-time highs. Can this rally continue into next week, or does the SPY need to take a breather here, broaden, as some gurus say, and maybe ramble around for a while? We'll have to see. We'll have earnings continuing next week. Next Wednesday, Tesla announces earnings. Next Wednesday, the FOMC is going to make its announcement. So what's going to happen here? We know to keep some numbers right where we can see them, we'll call this 609 resistance right where it is. And then we can see that there's potential support here down to the 50-day moving average. 596 is where that's coming in. Then, of course, the 20-day is down here at 593. So this little area here should be pretty strong, hopefully. Then we have down to the 580, 581 potential support line here. and down to this 575 January low. We can, if we want to, look back and see the October low at 568. And of course, hopefully we don't need it, but the 200-day is down here at about 559. So again, earnings season continues next week. The FOMC announcement is next Wednesday. We'll have a lot going on. So please just make sure to keep an eye on your protective stops. Our next chart today is a daily chart of the Invesco QQQ, symbol QQQ. This ETF follows the NASDAQ 100, the top 100 non-financial stocks in the NASDAQ stock market, including large cap momentum stocks like NVIDIA, Meta, Alphabet, Apple, Tesla, that whole group. Now today when I captured this chart, the Qs was trading at $528.78. And that is just a little bit, here was the all-time closing high, a little bit below the December 16th all-time closing high, which came in at $538.17. So that was our all-time closing high on the QQQ on some of these big momentum stocks. Now we know that most stocks and indexes had August lows. So from the August lows and then rally, the Qs have been basically walking up the 20-day, the red line, basically walking up, except for a little hitch here, up the 20-day moving average up to that all-time high at 538. Then on that Fed day that nobody liked, from the comments that were made, then the Qs fell down pretty hard, down to all the way down to the 50-day moving average to 509, rallied up to 530, stopped above the 50-day, which is good, rallied back up above the 20-day to 630, then down to the 50-day again here, and we had an intraday low here at 500. Came down to, down to the 50-day, we had an intraday dip here at 506. I wanted this to hold up along with that last one so we'd have price support here, and we kind of do. The 50-day moving average, though, helped to hold it up. It looks like we had an intraday drop to 506, but it's all right. Then we had another rally again, couldn't stay above the 20, then back down to the January low, hopefully it's a January low, at $499.70. Call that 500 if you like. So then it bounced from there really, really nicely, again, back up to where we are now at $528.78. Now, so what about next week when we have more tech companies coming out? I think Lockheed Martin's coming out next week too. There's a bunch of them. So what do we look at here? Well, we say nearby resistance here. We're going to put it up here at the 538 line, that all-time high, and we can say where we are now because there's a price point here too. So right about 530. Is a potential resistance line right where we are, and then resistance up at 538. Then we can look at the moving averages. The 20-day and the 50-day are coming in pretty close to each other here at 517, 518. So keep that down in mind. Then we have this low here, this January low at 500. And you say, well, that's not a big deal. But what you can do is you can draw this line all the way back, and it will kind of hit these October highs here. So what was resistance is now potential support. So that works. See if that works. Then we've got the October lows at 484. Hopefully we don't need it. The 200-day moving average is down here. All in all, again, it may be an exciting week. We're not back up to the all-time highs on the Qs here. We'll have to see what happens, whether it needs to take a breather, whether it can rally and go higher. We won't know till it happens. So again, please keep your protective stops in place. Our final chart today is a daily chart of the iShares U.S. Pharmaceuticals ETF, symbol IHE. The IHE has 42 holdings. Some of the top holdings are Johnson & Johnson, Lilly, Pfizer, Merck, Lilly, Bristol-Myers Squibb, you've seen them all, Zoetis. Now, when I captured this chart, the IHE was trading at $68.07. If you look back to, it's kind of an interesting chart. If you look back to the August highs here, and you say, what do you mean August highs? Nobody had August highs, but the IHE did. You can see back here into August where actually it rolled over pretty hard with everybody else, but then it rallied high, and it immediately is trading way above its 20-day moving average, then coming down and starting to make like little lower lows here, like we're doing a downtrend here. So lower highs and lower lows, and it's coming in here at 70, 69, down here to 68, got to the 200-day moving average, fell below the 50 and the 20, got to the 200-day, was hoping, but hope didn't work. So came down here and made November 19th drop down to 65.80, rallied to 69.50, tried to get over the 50-day but couldn't, rolled over, see how tough that 50-day moving average is, then rolled over again down here to December lows at 64.99, and then rallied up, couldn't keep going, fell back down, and then started consolidating along, I'm going to call it the 65 line. So it starts consolidating along 65. And I'm watching that, and I'm backing up in and it's kind of funny because that whole time that it's coming down, S&P 500 stocks, most of them, and the Qs, the techs are moving higher, and pharmas are moving much lower. So the money, the word is, of course, the assumption is money is moving into technology and out of the consumer staples like pharmaceuticals, for example. So I'm looking at it and watching it, and I'm saying, but look at this, how it's consolidating along 65, and even better yet, what I like is the fact that I see volume coming into it. So the bears held it down for a little while, but it went sideways. They couldn't drive it any lower, and it held along the 65 line. Then about mid-January, it pops up through the 20-day, up and out, and then I've been watching it for the last few days, and it's been drawing a triangle here, and I said triangles either break out or break down. It broke out, and in the last 2 days moved above the 50-day, and today is so far above the 200-day moving average. And of course, if it moves higher, these moving averages will all get settled with the 20-day on top and so forth, if that happens. So what I'm looking at here as and all of a sudden people here are saying, oh yeah, AI could really affect pharmaceuticals, which is probably true. So I'm looking at this here to see if it becomes an opportunity. If in the coming week the IHE can stay above the 20-day moving average, which is coming in right now at $66.37, if it can do that, I will buy a small position of the IHE in my trading portfolio. I'm going to put in a stop at $64.90. That's right down right here, okay? Below this consolidation by a few cents anyway. Now, if and when the IHE can move up to this prior pivot high here, I'm going to say that if it comes up and closes above 69.50, I will add to my position. And of course, by then my stop will be a trailing stop. So you may want to keep an eye on the IHE in the coming week. And now, please know that at ToniTurner.com, we've lowered the price of all of our online training programs to make them more accessible to everyone. So if you'd like to become a more profitable trader, now is a great time to check out my timeless trading programs. One I like to talk about is Trade the Trend to Profits. It shows you how to enter, manage, and take maximum gains from long-term trades. If we're lucky, the IHE will turn into a long-term trade. In this program, you'll discover how to trade, how to locate high-quality stocks rising in the early stages of a strong uptrend. Then you'll enter and hold that position as long as the trend is in place, which can be weeks or months, which is, of course, ideal. When you get the signal to sell, you'll take profits. Done correctly, this is one of the easiest and most profitable ways to trade. Now, our new low price for this program is only $127, and you'll receive special bonuses when you order, including 1 month of Metastock daily charts, or I love Metastock real-time charts, and that's for free. From our ever-popular 7 steps to how to swing trade successfully, again, trade the trend to profits, how to read charts, 3 winning setups, great for short-term traders, bottom fish like a pro, another one of my favorites. Find out how my online programs can help you earn more money quickly and easily. And once you purchase, you have unlimited access to learn at your own pace. So be sure to check them out by going to the link on this screen, or easier still, just click on the orange button below. Until next week, keep green on your screen. I'm Toni Turner, and this is The Market Now.